elevation.
Cool and Dre.
Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, guys? Welcome back to Goofy Investing, where we talk about investing in the stock market. Still the underground, small channel, big value, all right? We're going to be taking a look at a stock here that I did not know about until my Patreon brought it to my attention. They really wanted me to do the analysis, so here we are. We're going to be taking a look at Duolingo, all right? Ticker DUOL. Trades on the NASDAQ for shy of $100 a share, $96.54. Market cap is $4.53 billion. Where are they headquartered? What do they do? All right. Well, they're headquartered in Pittsburgh, Pennsylvania, and they're in the consumer discretionary education services industry. But typically it's an app, okay? This company is centered around an app that teaches that on their initial launch was more of a, we're going to teach you how to speak different languages, like a Rosetta Stone, but a little more advanced and more user-friendly on their app. They are expanding out to different categories of math being one of them. So there's that to consider. Let's take a look at their balance sheet. We'll take a look at some growth rates, business model, and so forth. And then, of course, I'll tell you if I think that this is particularly a good investment or not. Not financial advice, for entertainment and educational purposes only. All right, so 100.98 million in debt, 1.14 billion in cash. So strong balance sheet, real good. I love to see it. Enterprise value sitting at 3.49 billion. All right. As far as sales, they have accomplished breaking the $1 billion in sales in 2025. Earning consensus estimates got them growing in the mid-teens. All right. And that's in line with their guidance from their earnings call. I've digested the earnings call, looked into the company and all that good stuff. I think they probably beat here. I think they probably do 18% in 2026, but we'll see. All right. So financial statement analysis, everything seems to be going in the right direction. SG&A and R&D, I'd expect nothing less. With a high capex here with this type of business model, especially in the upcoming technology disruptions of artificial intelligence and so forth. And perhaps this is probably one of the reasons why the stock is down. Diluted weighted average shares and basic weighted average shares outstanding. The difference between the two is the diluted weighted average shares is a projection of options or any dilutive instruments that will give an annual target of whatever shares there are to come. Basic weighted average shares outstanding is what they have right now on hand. I like the gap to be really close. This is pretty close, so I like to see it. I think that for all extensive purposes, the actual dilution rate is in line with their growth rate and what they have done. In fact, quite impressive, to tell you the truth. It's actually a good dilution rate for the type of growth this company has provided. Net income, this is a net income positive earnings company, all right? They actually have profits, and I'd expect nothing less. We'll go to their profit margin. High margins here, all right? Almost looks like a matured margin profile. 5-year average, to see a 5-year average go from negatives to these, to this high net income and high leverage free cash flow margin is very impressive. A little bit of contraction on their gross profit margin. Probably the business is under pressure and so forth, which I'm not surprised, okay? So let's talk about the earnings call, all right? I assess the earnings call was good. I like the way that this management team is running the business, all right? I will pull up their actual I'll pull up their insider ownership. I believe they own a little bit over 14% of the stock. Um, so insider, yep, 14.36% of the share float is owned by insiders and 81.74% by the institutions. Okay, so there's that to consider. Going back to the earnings, I really like this management team, guys. All right. Um, CEO and CFO have their head on straight. They know how to sell this business. And, the actual interpretation of or the feedback that I've assessed with this earnings call is, the business they're they're going right now, they're in a phase where they're in uncharted territories of how we're going to launch this. As far it's already launched, but how we're going to move this going forward as far as their next S curve growth phase. um, it seems like they're very open to a lot of options, and they're very reactionary to their ideology of how to go forward with the business. So I assess there was some broad guidance out there of strategic investments that they're going to make into the business. There was a little bit of conversation with the analysts talking about moat and disruption of AI and so forth. Now, how do I assess this company in the tech SaaS apocalypse and the disruption of AI towards a lot of these companies? Is this one of these companies that will get disrupted by AI? The answer is no. I assess that they're going to hold moat with their actual product offering. And with the advent of AI, there will be some competitors trying to encroach on their market share and and so forth. But at the same time, I assess this management team is gonna gonna identify that and be pivotal when that happens, and they will just crush them. I assess there's a wide moat here with the ease of use with their app. So I see some moat here within the company, so I'm not really too worried about that next phase of, potential disruptors coming up to challenge them. All right. Um, so the actual way the guidance and the company is thinking is they're going to issue out a $400 million buyback authorization, which was just approved by the board. Um, I can dig it. All right. I think that now the actual price of the equity, um, I'm not so convinced that the company at this actual valuation. Of course, the buybacks will be accretive no matter what, but with this margin profile and the way their financials are, but they're trading at 4.26 in on the trailing sales and 3.75 times on the forward sales. You know, the way I assess this business model and so forth, is I'm not too convinced that they're worth this price to sales premium. Okay, guys? And I know a lot of investors out there are going to get angry when I say that, but hey, I'm just going to keep it real. I assess that they're probably just a little bit lower than these actual. I think they're probably worth maybe 3.5 times trailing and 3 times forward sales. So the buyback will be accretive to defending the stock. Right now, there's an 18.81% share float. So the buyback will create a floor. They reported earnings here on February 26th, and looking at February 26th, slight drop, but the floor is forming. Once they announce a $400 million buyback, bears think twice about trying to come in here. All right. Shorts can get in real big trouble if they eliminate 10% of the float and so forth. All right. So there's that to consider. All right. Insiders are buying. All right. We just saw Shelton James buy this with a direct buy of 5,000 shares. I'll pull out my handy dandy calculator. 5,000 times. Oops. 5,000 times 99 1.76. So about half a mil. So one of these directors dropped half a mil in buying stock. All right. Um, I think that's good. You know, a lot of companies, a lot of the insiders don't buy, and that doesn't necessarily mean they're a bad company and they're not going to grow. But the actual insider activity is a trigger and an actual blast announcement to the market that this is undervalued. Now, one thing you have to consider is the actual amount of ownership the person holds. You see here the shares held is a fraction of what the other insiders that are, selling have. Okay. So, you know, this is a way to get skin in the game for this specific director and have a comparable position compared to all the other insiders. Okay. So there's that. I like the actual shareholder letter and how they break down everything. The CEO, the CEO and co-founder here, he is very I see him as a visionary and he's on a mission, and that's very attractive to me. So their management team I assess is A grade. In fact, I say they're a great management team. Okay. So that's what you got going for you if you're a shareholder there. Stock based comp, we'll look at that real fast. Stock based comp is a fraction, about 14% of sales, shy of 14% of sales right here. So that's a low stock based comp, and you have insiders buying with a $400 million buyback. I assess that the actual diluted weighted average shares and basic weighted average shares, they will go down. I think that with a $400 million buyback in combination with all of that, share float reduction will happen. Okay. So you're going to get that. All right. Now, they on the earnings call, I did catch on that they do intend on actually executing on this. And in some companies, what they'll do is during the earnings call, they'll say, we've authorized a share buyback of X dollars, okay? And we will be looking towards options on being able to execute that. If they come up with that similar language, that's the company signaling that we're authorizing the buyback, but we're not ready to say that we're going to execute upon it, okay? So just because the board approves a buyback doesn't necessarily mean they're going to buy back shares, all right? This one, it seems that they're going to. Okay, we believe, and I quote, we believe this represents good capital allocation discipline. Excuse me, and expect to execute upon this authorization in the coming year. So the management has signaled they intend on really pulling the trigger. All right. So there that is. All right. Um, so let's talk more about this investment. All right. What do I think? Is it a good investment? What type of price is the investor coming in right here at these levels? Okay. So I think this is a great management team. I think it's a good business, and the management team is running this business really good. The business model, however, I do assess that it's semi pseudo niche. Bulls can easily argue against that, though. Okay. And my interpretation is probably a weak assessment. All right. Um, and the total addressable market and runway is probably wide, but the upside on that runway, there may be a cap of maybe a decade, 2 decades, if that. Okay. That doesn't necessarily mean they can't provide value. I think with this runway, this company can probably get a total addressable market runway of growth of maybe a decade, and you're looking at maybe a 6-7x in 10 years. Okay. So I assess this company will outperform the market. Um, and especially if they keep on this management team and they keep executing upon their vision. All right. Me personally, it's not for me. And the actual price that investors are paying right now, I don't assess it to be a great price, a good price. I assess it to be a fair price. So if you want a really good company for a fair price, maybe this is the play. All right. Risk to bankruptcy is very minimal. This is very value creative. You know, this is a, you know, value creation is very possible and likely with this setup here. All right. So, thumbs up if you like the video. If you're getting something out of it, subscribe. Check out my Patreon, all right? Get access to all my collections. I have hundreds of videos of content on my Patreon that's exclusive. And you know that those videos are tailored for you to become a or help provide an environment for you to become a better investor from a developmental standpoint. You'll get more direct access to me. You'll get direct access and, you know, benefit off community there with you. All right. You get access to all my hot stock picks. All right. You get access to everything I'm doing and I'm projecting to do in the market. And you get to follow along on the actual results. It's all quantitative, it's all documented. All right. Disclosure, I don't own shares in Duolingo and I do not plan to. All right, but that doesn't necessarily mean it's a bad company. I'm very specific, I'm very, very picky, very nitpicky on the plays that I personally make. All right. Um, $14.99 a month, you really can't beat it. I know it suspiciously looks like $15 a month. Click this button right up here and save 20% by paying an annual membership. You know, you it's a steal for the content that comes on there, in the community that I've pretty much built and I'm still building there. I'm very proud of my community and the headway that they're making on actually, you know, increasing their performance and capturing exponential gains. I assess the membership pays for itself and so forth. All right. So check that out. I appreciate everybody's time on here. You know, y'all support means the world to me. Be on the lookout for more videos. And in the next time, take it easy.
You take the blue pill. The story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill. You stay in Wonderland. And I show you how deep the rabbit hole goes.